Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, June 28, 2023. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? The first thing you notice right out of the chute is the Shenanigans Tail candle. How do we know it's a shenanigans, or what is a Shenanigans Tail candle? Well, it's a candle that really doesn't exist, or a tail that really doesn't exist in the market. The price was not up over 450 in the SPY today. However, we have a tail up there. This will likely disappear maybe at some point during the video, maybe overnight, tomorrow. It likely won't be there going forward, but I took a snapshot of it as a just-in-caser. We know that it showed up on the chart. So what does it mean? Let's start there today, because the first thing we do is take a look at the things that are jumping off the page at us. Those are the obvious things. We want to be Captain Obvious when taking our initial look at the market. What's obvious? Well, you got this Shenanigans Tail candle. What is it? Well, we don't know exactly what it is. We don't know how it gets there. Maybe it's some kind of shenanigans by the institutions. Maybe it's something else. We don't really care what it is. What we do know is, and we've seen these before, at some point in the future, whether it's a week, a month, 2 months, at some point in the future, we're likely to see price up in that neck of the woods. It even shows up on the weekly chart. And if you just draw a line over to where's it going? Well, it's in the neighborhood of the next set of highs. It's not at the high, but it's in the neighborhood of an area that what happened? The market essentially broke down from. Well, let me explain that one, because the same thing appears on all charts. All charts act and react together. So when the market made a high up here, the market came down. It found stability. It tried to rally back up and resume the uptrend, and it failed right here. So somewhere in this neck of the woods, and we know the price it failed at specifically is up here at the high. They don't have to retest the high, but that's the price. So somewhere in this zone is where the market tried to recover, put in a lower high, and fell down. So from my standpoint, this particular Shenanigans Tail candle represents the area from which the market formally broke down from. I would put that on a sticky note, put it in a lockbox. What else do we have from the daily chart perspective? Well, let's stay with what was happening over the last couple of days. The market had a pullback into home base. Home base is the 20-period moving average. She found stability, found support just short of home base. That happens. Sometimes they come up short. Other times they spike them through. We know how that works. And the market bounced yesterday back up. Nice, big, healthy up day. Not tremendous, but a nice, healthy up day. And today, she stayed right there. Forget the Shenanigans Tail candle for now. She stayed right there. The market finished slightly positive on the day. Well, I take that back. The SPX was down 1.5 points. The market rallied just after the closing bell a little bit, and we're showing the quotes on the spiders up, but that's aftermarket activity. But it's not that much. The market finished flat, which is good if you're bullish, because it's telling you that instead of a fake out yesterday back up, that was a potential sustainable move for more upside. They had an opportunity to collapse today back down. They didn't take that opportunity. Instead, by the end of the day, they finished pretty much around the flat line from yesterday. That can't be a bearish signal. Doesn't mean directly the market's going up tomorrow, but it's not a bearish signal. Now, what do we have going forward? We have really almost a 4-day holiday weekend. Monday, the market is open half a day. Tuesday of next week, the market is closed for the 4th of July. The market is leading up into tomorrow and Friday into one of these 3-4-day holiday weekends. Are they going to collapse it, or are they going to float up into the holiday weekend? We've seen this many, many times before. It's not a guarantee. It's more of an awareness that they do that kind of thing more often than they don't. The market had their pullback into an on-time type of situation. Nothing's changed. She's doing what the schematic that we laid out ahead of times indicated. Big picture perspective, forget the Shenanigans Tail candle. She's eating time off the clock, really for the third week in a row up in this neck of the woods. This is a bullish thing going on, going sideways, formulating a flag pattern. It's not really a full flag yet. They don't have to wait for a full flag. Maybe it does this another couple of days. Maybe she goes up next week after the 4th of July. Maybe she goes up into the 4th of July. Either way, that's what's going on here. How does that change? What changes it? Well, we can use the weekly close, the low here of this candle, 430.17. We'll call it 430. We'll use 430 as our bogey on the weekly chart. What happens if they start getting below, pushing below 430? Stay below 430. It's going to open the door for another leg lower. Might want to get out your sticky notepad again, because the first stop, if they went on a leg lower below 430, would be a spike below, not by much, but a spike below 428. Put this on the sticky note. If they did all that, that should be, from an intraday perspective at minimum, garden variety of chart support. By the way, how did we do today inside the numbers and in the live room? Well, we pretty much nailed the low of day in the morning, took a nice healthy ride up. Plenty of traders made pockets full of money today. That's the objective. Let's take a look. The zero dark 30 stuff starts out like this. Had a slight pullback on our hands. The bigger picture, we always have to take account the bigger picture when we start analyzing the intraday stuff. What's the bigger picture? We can't lose sight of what the bigger trend is, the trend from an intraday perspective, the trend from a daily chart perspective, and the trend from in-between perspective on some of the other charts. We need to know what the big picture is before we drill down. And then what I'm doing is I'm reiterating what we discussed in last night's video. We discussed specifically where Mrs. Market would go to this morning on a pullback operation. The first place would be around 435, give or take, which was the last breakout area in the sequence. Since we think better in pictures, right of the vertical is today's activity. 435 even is the horizontal line running across the screen. But wait, there's more. The overnight thieves did it early in the morning. We'll call it a zone between 435 and 434.25, a 75-cent zone on a $435 stock. Not a bad situation. They never even got to the bottom end of the zone, and we wound up buying low of day. Traders played some ping pong in here. They bought it a couple of times, took a scalp early, bought it again, took it off, held a trailer. We had something for everybody. We had traders that got a whopper, traders that got a whopper junior, traders that got 2-3 scalps plus trailers out of it. We had a whole myriad of traders that made money today. And then you can see here, the flip side scenario is getting above 436.15. Now that will come back into play, as well as 436.80 in a few moments. Let's scroll up, see what else we have, because that was the zero dark 30 stuff. So more specifically, 9:15, what's the early scoop? 435, give or take, down to 434.25 is the area of support, bull-bear battle situation, and a bounce back in the other direction. You can't lay the trade out any more clear than that. The idea would be at least to run a test of the gap left open yesterday around 436.15. Back to the pictures, there's your exit, in front of it, at it, a little above it, trader's choice. That's your exit. They ate time off the clock, and then they took another leg higher. The other leg higher you'll see also in the notes. What more could you be looking for? Just saying. Pause the video, read the notes, go back to the chart to double check the work. It's all in here, step by step, number by number. Everything you need to find success in these markets is in here. 436.75, give or take. You saw 436.80 before. It's the same thing. There's the next place. They come up just short. They go through. They come back in. The numbers, as long as they're above 1, the next one above becomes a target. Doesn't mean directly it's a short trade. It's a target. Summer short trades, we don't do that in the afternoon. We don't do what I call in the live room stupid stuff in the afternoon. We stay away from it. When you have a blockbuster morning and you lined your pockets with cash, you keep it in your pocket. You go about your business. It's like a store. The store's open all day, but you don't have to go there and shop all day. You go there to get what you need and you get out, you go to the next stop or you go back home. Same thing with the market. Just because it's open all day doesn't mean you need to participate all day. The longer you participate, the more the odds tilt in the market's favor of getting you back. Pause the video, read the notes, go back to the chart to double check the work. What you'll see here at 12 o'clock is, by the way, they're flirting with yesterday's highs. We talked about that earlier if you read the notes. Above 436.81 was that former high. The door opens for the next leg higher, the next zone, 437.45. Write that down for a minute. Check out the high of day, 437.44. 1 penny from that number. No accidents or coincidences. Pause the video, read the notes, go back to the chart, double check the work. None of these stocks on the move hit their entry objectives today. You could see the list, but nothing hit, so therefore there were no trades from a stock on the move perspective. But keep in mind, earnings season is going to get fired up here in a week or so, and they'll start to come fast and furious. I like to call this period of time the donut hole. They trickle out. We have some stuff moving, but for the most part, they'll come fast and furious starting in a week or two. What's going on over in Camp IWM, my favorite leading indicator? They finished up on the day about 0.5%. That's called follow through from yesterday. They closed above yesterday's high. That is a bullish picture. Second day in a row, closing above all the moving averages on the daily chart. That is a bullish picture. This was a pullback operation, on-time situation. We talked about it ad nauseum. What are they going to want to do? They're going to want to get to the area that they broke down from in this zone. The pinpoint number, that's not the purpose of this video. The concept of how the market works is more the purpose of these videos. They want to come back to run a test in this area. You want the specific numbers? Come over to the live room. We have the numbers for the IWM every day. What about the folks down at the transportation department? They're still going up another 0.75% today, 118 points. Turned into a melt-up operation after they ate some time off the clock. Trend is up. Nothing wrong with the chart. No reason they can't keep going. They don't have to keep going. We don't know if they'll pull the rug out next Thursday. I'm just saying, when you look at the chart, you take it at face value. There's nothing wrong with this chart. It's bullish. It's in an uptrend. Not every time it's not clean as a whistle, but you have higher lows. And watch this off the monthly chart. You made a high and you had a 3 to 4 month pullback. They ran a test in the neighborhood of the most recent in this sequence breakup candle low, and they held it. They reversed. The bulls came out, fought the deal, bull bear battle down there. And now you're back above the 20 period moving average, which puts them above all the moving averages on the monthly chart. The month closes on Friday. Unless they collapse, this is a bullish close, obviously. The trend is your friend until it's over. We treat each chart independent of one another. We analyze the markets, being the umpire, calling balls and strikes. I know all the rhetoric out there about the market's going to collapse, the market's going to collapse, the market's going to collapse, the YouTube videos, the blogs, the TV, all that stuff. At the end of the day, what the market's doing is what it's doing. They'll be right eventually. I don't care about eventually. We're the umpire taking her at face value. Anything different in the Qs? Same routine we just discussed. Pull back into home base, 20 period moving average. Another bounce day, did not close above yesterday's high. It was close. They spiked it, but it's meaningless. It doesn't matter. They could go sideways and have another leg lower, or they could just hold a 20 period moving average. Today, at face value, the market's above all the moving averages, and the trend would be the dominant thing. When you look at the weekly, we could say, well, then trouble starts brewing below the low of this particular breakup candle, 355.20, call it 355. You get below 355 in the Qs and they stop eating time off the clock. Not that the trend changes, it won't change on the weekly chart, but it would begin to change on the daily chart. Just knowing where we are. The financial space was pretty flat today. Nothing doing. We can't make a federal case out of 3 pennies one way or the other. They're sandwiched in here in between these moving averages. There's nothing to do till they get above one or below the other. That's it. And Smashmouth, down $1 today. It's not a big deal. It's a retracement according to what happened today against yesterday's up move. Today across most of the markets, it was a garden variety retracement operation. So in the SMH, for example, they came to backtest the 20-period moving average on the daily chart, bounced off of it. Big deal. Also happened to be around a 50% retracement from yesterday's low to high, or the low to high. Maybe it was somewhere short of that. It doesn't matter. That's garden variety stuff. Above all the moving averages, and you know the rest of the thing. The trend is your friend. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.